Today I'm going to tell you what I think are three of the best ASX resource stocks to buy now. One is in gold, another's in uranium, and the last one is a mid-tier iron ore miner. And they all have big upside potential and what I think is relatively low risk. As always, this is general commentary and doesn't take your personal situation into account. Alright, with that said, let's get to our first chart. Okay, so I want to begin by setting the scenes for gold. So this is a chart of the gold price we have on the screen. I think gold's looking really interesting. It broke higher here from this 12-month trading range, which had been containing the price. And what we had the breakout and we had an initial run higher. We had a strong, fast move up towards gold's all-time high. And I think this move up here, got a lot of people excited. There was talk of inflation. There was the war in Ukraine is going on. A lot of geopolitical sort of tension, but gold didn't follow through. Gold then had a sharp 10% fall back down here, and now that would worry. That would put off a lot of the gold bulls, I think. But what I think is important to remember is that I think this is actually a good thing. This is actually a good thing for gold because what it does is it shakes out a lot of the latecomers to the rally, and it also gives gold a chance to establish some new support. And that's what it's done. It's establishing some support in here around this 1900 level. And now this is really important here. I think this level here is the key to gold's near-term outlook. It really needs to hold its footing in here, right here and now, to keep its bullish prospects alive for the near term. And if it does do that, I think it really does set up the potential for another retest of this high, this all-time high back here at just above $2,000. So if it holds, I'm looking for gold to make a move like, potentially like this over the next few weeks, next few months. That's the potential if it holds at around these levels here. So that's really the key to it all. And if it fails here, well, then it comes back into this range and it puts the bullish case on hold. But at the moment, look, we've got a breakout in the gold price, and I think we need to give that breakout the benefit of the doubt, and I think we need to run with gold. So having said that, what are the opportunities? Where are some of the plays in gold? Well, one of the ones which I really like is Evolution Mining, ticker code EVN. Now, I could really be profiling any of the big three Australian listed ASX gold stocks, Northern Star, Newcrest and Evolution, because they've all got a very similar chart profile. And the same goes for a lot of those mid-tier North American miners. They've all got this similar chart profile through here over the last 18 months to 2 years. And like looking at this chart of Evolution over the last 2 years, it doesn't look too flash. It's been this steady declining trend. But what this chart doesn't show is the 6 years prior. So let's jump to a weekly chart briefly, and it puts this into perspective. So what you can see when we look at the weekly is Evolution has had a really strong bullish period over a number of years, as has the gold sector generally, and the gold price. What we've seen over the last 12 to 18 months, or probably more like the last 18 months to 2 years, has been a large consolidation and correction of this rally. And it's interesting, we put some Fibonacci retracement levels on. So these are really interesting retracement levels that a lot of traders use to give an idea of where a stock could pull back to. When we measure out this move from the low to the high, we see that this 2-year consolidation correction has come right back into this Fibonacci pocket, right around the 50% retracement. So far, this is very much textbook. It takes time, but it is textbook the way it's been playing out. So let's go back to our daily chart and talk more about the opportunity here. And what you can see in this chart, the key feature on this chart are these two converging trend lines which I've drawn. Now, this is called a bullish wedge formation, and these formations often appear near the end of a bearish phase. And what they show, as you move along the wedge and it contracts, what it's telling you that the downward momentum that's been in place since the high is losing energy. It's losing steam. And the key is to wait for the market to tell you when the time is right. And that's when you get the trend change. And that's what we've had over the last couple of months. The trend has changed. We've broken above this trend line and we've pushed up to a multi-month high, broken out of this wedge. So that's a sign that the trend is changing. We're also getting these moving averages turning positive. So it's a really positive setup. It's a positive setup for Evolution and the gold stocks generally. And I think this stock has the potential over the next 12 to 18 months to be trading up towards $7 and potentially beyond. So we're looking at just going back to that weekly chart briefly. This very much has the structure that could see this stock run over the next year or two, up to $7 and beyond. Of course, it's not going to be a straight line, but it could be a repeat of something like that. And so a lot of upside potential in Evolution as well as many of the other gold stocks. And another thing I like about this is that you could play this. It's possible to play it, to have a trade in a stock like Evolution with relatively low risk. So you look at, like, where would you place an exit stop? It's you could have an exit stop just back here, just getting back towards the breakout point. So just measuring that out, that's something like a 15% stop loss. 15% stop loss on a stock that could double. So that's good asymmetric risk reward. And I like what the stock's been doing over the last 4 weeks, just trading sideways within this tight range. That shows to me that there's buying interest on the pullbacks and it's underpinning the share price. Of course, this consolidation could go on for longer. It could pull back a little bit more, but at the moment, this is looking like the momentum shifting in favour of Newcrest, in favour of Evolution, I should say. Okay, so let's go to our next opportunity. Our next opportunity, which I'm seeing, is in the uranium market. And this is an interesting play itself. So let's start with uranium. Let's set the scene. Let's set the scene by looking at the uranium price. We'll go to the weekly chart because weeklies are great at giving you perspective on the overall price movement. So what we have here, we've got uranium going back to around 2005. We had a giant boom in the mid 2000s, which was followed by a decade-long bust. And then over the last several years, we've had this rounding basing formation appear on the charts. And what I like over the last couple of years is this upward momentum which is coming off the base. And what's particularly interesting over this period is that all the dips we're seeing through here, all the dips are being bought, and the price is then continuing to push up to new highs. And there's also a strong demand-supply story underpinning uranium. So I think over the next few years, uranium's got the potential to head back up towards these all-time highs. It's not going to happen in a straight line. There's going to be plenty of pullbacks along the way, but that's the overall potential over the next few years. Maybe that's a story for 3 to 5 years, getting up to those all-time highs. Who knows? Timing's always hard with these, but that's where the momentum is currently pushing. So there are several ways to play uranium, but I want to focus on one today. It's an ASX listed uranium play. Now let's just go to the stock code for this. The stock code is BOE. It's a company called Boss Energy. So let's just call that up on the chart and let's go to our daily chart for this one. And it's it's a really interesting play. Most of the ASX listed uranium plays on the ASX, they don't have a great investment case. This is one of the few which I think does have a strong investment case. Boss Energy, it's nearing the final investment decision on a site they have in South Australia. Plans are to be producing uranium within 12 to 18 months of making a positive decision, which is what the company appears to be heading towards. And the company's saying they could be producing up to 3.3 million pounds of uranium per annum, which would make it a globally significant producer. Now, really interesting chart structure over the last, well, since September. Since September, the market's been moving within this big trading range. And I think this trading range has really just been a pause in this trend, which has been in place since like early to mid 2020 with this large uptrend. I think this is a large consolidation of that trend, and I think this is going to create a base for a new leg higher in Boss Energy. And look, if we do get if this does in fact turn out to be a large basing formation, we could see this over the next 12 to 18 months start to move up towards $4 from current levels of around $2.30. So considerable upside potential in this stock. Now, as always, you need to look at the risk. What is the risk involved with taking a position, and how do you take a position in this stock? Well, there are two ways to play this. One is, firstly, you got the more aggressive play. The more aggressive play is you'd buy around current levels. Current levels are around $2.29. You can buy here. There's support underpinning the market at around 220, so it's only just above support. This means the risk can be really held quite tightly, really limited the risk. Look, you could have a stop loss just below these lows, which is only be about $2.11, which is something like, look, from the current share price, it's potentially like less than a 10% stock, 10% stop loss. Alternately, give it a bit more room down to just above $2, which takes you to about 12%. So you can see a lot of upside potential, relatively low risk. A more conservative play would be to wait for a break of this high here at $2.59, I think it is. So that's $2.54. So a break of the high at $2.54 from a few weeks ago, that could be a sign. So maybe it's a case of waiting to see whether we do get a break above. That could be the time to wait. More conservative play. It's going with the momentum should that occur, and means the stop loss needs to be a little bit further away. But that's the trade-off for waiting for the momentum to actually kick in rather than preempting it. That'd be my preferred play, to buy on the break of momentum. And look, again, it's one of those really asymmetric opportunities, highly asymmetric, where relatively small downside is coupled with big upside potential. And so let's move to our third opportunity. And also, if you're finding this interesting, please hit that like button and leave a short comment. Just, hey, thanks for the video. Just tells YouTube people are watching, and if people are watching, then I can make videos like this in the future. So please do that. Now, the last opportunity I want to mention, an iron ore miner. Ticker code is MGX. It's Mount Gibson Iron. It's now this is an interesting one. It came up in my algorithmic scans just a week or so ago. It's a mid-tier iron ore miner. Market cap about 760 million. So it's probably not on the radar for most people. Most people are looking at larger stocks in the ASX 300. But this is it's a small to mid cap play. What I like about this is that it is starting to gain upward momentum after this big decline here, which we had last year. We had in 2001 when the iron ore price was slumping. Now, I'll come back to that in a tick. Just a little bit of background. Mount Gibson Iron, based in Western Australia, relatively high cost miner, so it's a lot more leverage to the iron ore price than some of those top tier players. And if we look at the chart, as I was saying, you can see it's turning higher after this large sell-off that it had. So from a momentum perspective, it's starting to do the right things. Just here, you can see the moving averages have crossed. I'm looking at a 50 and a 100-day moving average. I want to be buying stocks when they're trading above their moving averages. Don't want to be trying to pick the low as it's falling when it's below the moving average. The odds are more in your favour, I believe, when you're buying above the moving averages. So that's where it is now. It's also breaking to a new high, which is another positive. So it meets the momentum criteria, and the new high criteria that I look for when I'm assessing potential new opportunities. Now, again, risk could be managed with a relatively close stop loss. It depends how much risk you want to take. But look, a stop loss somewhere just down around here, it's it's a relatively low risk play for large potential upside. Upside, you're looking up north of $1. So again, one of those stocks that could double, but the risk could be contained to maybe a 15, 20, 25% stop loss. So as with all these stocks today, it's not about getting every call right. Any one of these could fail, and that's not a problem, because what the idea is, it's about identifying possibility, then assessing the risk and the reward dynamics of each individual stock. And when we assess those things, with the three stocks that we've looked at today, you have three situations where you can keep your risk relatively tight with an exit strategy, but then have significant upside potential should they run. And you really only need one of them to run to potentially make a lot of money. So if you play those sort of setups consistently, then you start to shift the odds in your favor, and you get away from those people who constantly buying dips and holding stocks as they continue to fall. It's about looking for low risk, high reward setups. And if you'd like to know more about how I'm identifying these stocks and the best stocks and what I think are the best stocks to buy now, and how I protect my capital with risk management strategies, come over to my website, motiontrader.com.au. Hope you got something interesting out of that. I'll look forward to talking to you again in another video. Thank you. Thanks for listening.